In this video, traders, we're going to answer the question from a subscriber, which is the best way to trade crude oil. Which vehicle, which strategy, what news flow is important? Stick around. Hey guys, a very warm welcome to you. Alright, so thank you for your questions and support on the channel. It's much appreciated. This is a great question that has come from Minox. I'm not sure whether it's got emailed in or whether it's a comment, but it's here and I want to appreciate however you sent this in. What's the best way to trade oil? Should you use certain exchanges to save on spreads commissions? How much is a fair spread in this market? Can you gain an advantage if you watch Brent and WTI at the same time? By comparing their distance to pivot points or structure levels and reaction around it. Also, if one of them has a textbook pattern, could you use that information for trading the other one? These are great questions. Is it important to stay alerted of high impact Forex news, or is it enough to focus on the oil market news only? Superb questions, and these are, you all got great questions, guys, and this shows you this guy or girl is really thinking about what they're doing when they're trading crude oil. Okay, so crude oil. We have West Texas Intermediate, WTI, US Crude, US Light as they tend to call it in the spread betting or CFDs, and then you've got UK Oil, or they put it sometimes often in the spread betting kind of CFDs, which is the Brent Crude. One's traded on NYMEX, one's traded on ICE if you're going on the underlying. Okay, so you can trade either of these, and there's many different vehicles to trade these. If you go directly to the exchange, let's say Crude Oil CL on NYMEX, it's going to be a minimum one contract, and it's $10 per cent move. So oil moves in cents, so let's say it's $50.82. If it moves to $50.83, one contract is $10. So if it moves one whole dollar, you've got it, you're going to be making one whole 100 times by your 10, you're making $1,000, right? So 10 cents move, $100, $1 move, $1,000. So it can be quite an expensive thing if you've got a smaller account. If you're a newer trader, trading directly on the exchange can be prohibitive in just one contract. So that doesn't allow you any scaling as well. It's the same for Brent as well. Okay, so let's have a look. You can also trade it via a spread bet, and a 3-point to 4-point spread is about normal for Brent and West Texas Intermediate on a spread betting firm. CFD as well, the same, depends on how it's traded as well. Some spreads might just be the market spread plus a commission, but expect to pay all in all, whether you're just paying a spread or commission plus a spread, about, again, 3 points. Futures contract, I could say $10, but don't forget, you've got a commission on that to pay as well. So it's normally, it depends on who you're trading with and stuff, but you could expect to pay, you know, $6 maybe, something like that, maybe some more, maybe $10, maybe a bit less, but that kind of ballpark. So call it 1.5 to 2 points if you're converting into points, so we can have easy comparison here. ETF, you can trade something like USO, which is a crude oil ETF. That's not strictly the front month. It's got a little bit of a basket of some back month as well, but it's good. It's a good kind of proxy for crude oil. And of course, you can trade that in shares. So you can trade that 100 share batches, 1 share batches, very, very small. So you can go down to kind of, you know, $1 a point move effectively if you're trading that, or you can go even lower. Now it's priced slightly differently, so you've got to be aware of that, but the patterns are still the same. And then you've got options. Now options, of course, you've got to worry about the time decay, the theta, etc. So that probably not really a fair comparison, but you can get exposure to crude oil via options on the futures or options on USO. Anyway, going back to the point, what's the best vehicle to trade it? Spread betting or CFD trading is a great vehicle. It's slightly more expensive than going direct to the exchange, I appreciate. And if you've got certain strategies, going directly to the exchange is the way to go. Several years ago, crude oil was very good to me and I was trading it directly on the exchange. And then I moved over to spread bet because it was a longer term trade, because it was more volatile, and then the price was higher. Because don't forget, guys, when the price is higher, it's over $100 a barrel, if the spread is still 3, the range is going to be much more in ticks, so it becomes more feasible. When the price is low, the range is lower in ticks, percentage wise it might be the same, range is lower, and so this might become a little bit prohibitive, so you've got to go directly to the exchange. Okay, but the big thing we've got to point out here, guys, is the cost. You know, if you're trading $10 a point, you've got no ability to scale. 5 contracts, $50, just a point move. For small traders, smaller accounts, newer traders, it just doesn't make any sense. It's way too much. And so spread bet gives you the opportunity to trade it. Small position size, yes, you're paying more spread. Appreciate that. So you maybe can't be scalping very aggressively, but you can trade those small position sizes that allow you to scale out. So you can trade a small position size and you can scale out a position as well, which is also very useful in crude oil. Okay, so what strategy and what news? Let's move to news first, because what's in my mind, the question was, do you just keep an eye on Forex news or just crude oil news? I think you can get away with just crude oil news. This is how I would look at it. You know, you've got the inventories that come out weekly and tell you about the inventories and stocks of crude oil we've got. That needs to be aware of that when that's coming out, so you get caught out in a position. Engine, no pun intended, but what's the engine of the crude oil market at the moment? There's always an engine for the market, guys. Is that concern about conflict in the Middle East? Is it concern about the economy, which will affect the consumption of crude oil? Is it affect about China slowdown, China growth? There's always something that is the engine, is what the bigger traders and the hedgers and the producers and the consumers are all looking at, and that news flow and story will influence their action. So if you're a big hedger of crude oil, or a company that needs to hedge crude oil, and that's in fact impacting your decision, you're going to end up putting orders in the market. It's going to influence the market. So what's the big engine at the time? And then what are concerns? Where's the hidden risk going to come from? So is it going to be some kind of attack in the Middle East on the pipeline? You know, we went through a phase where that was happening quite a lot. Is it going to be something to do with economic data, which is why it's a great point that you should watch Forex news. You know, if it's a concern at the time, i.e. if there's a concern, there's a slowdown in the economy, then definitely, by all means, and that's affecting crude oil, by all means, watch economic data that would affect Forex, like your non-farm payrolls, like your interest rate announcements, like your Fed minutes, your meetings, CPI, all that kind of stuff. That's worth watching, because if people are concerned about a slowdown, or even at the other end of the cycle, a kind of an improvement, if they're concerned about that, that will affect the crude oil price. But this is only under certain times of the year or certain times of the cycle. So you don't have to be watching it all the time. But yes, if people are concerned about it, then do watch those bigger economic data announcements. All right, and so strategy, let's move on. Very good, in my opinion. Crude oil works very well with a price action type strategy. It's very nice vehicle to trade when conditions are right. It's a lovely market. It's one of the best markets out there. But when conditions are wrong, it's useless. It does nothing. Chops around, it pings about, flicks people back and forth, doesn't really move enough to quantify the spread, to justify, should I say, the spread, and it's one just to leave alone. So it comes in and out of favor for me, but it's very useful for price action. Momentum type strategy, talk about crude oil's momentum type strategies a lot. It's very good for those, very, very good. You get those pushes, those pauses, execute on those strategies, get another leg, get another leg. Very nice to trade that. Sticks to whole numbers quite a lot as well. You know, it goes to those key 10 or these decade numbers. And let's discuss the WTI Brent ratio. So I'm not a big fan of really looking at both, because I think that, you know, you can kind of get a bit confused with the two, but it's not to say it's not a good idea to do it. I think, you know, just my personal opinion on it. So the question is, should you look at Brent? If you're trading WTI, do you look at Brent? So what you could do, and I think this is okay, is you have your charts up, and let's say oil's bull flagging, Brent then goes, WTI doesn't go, you're trading WTI, you're going to take it anyway. That Brent going and breaking might well be the trigger for you to pull the trigger on your WTI trade long. So you might have it seen flagging, you see that Brent goes starting to go, WTI just starting to go, not through that level yet. You might just preempt the strike, hit that offer, thinking that the Brent is going to be the catalyst for it to go. Of course, that doesn't always work like that. Sometimes Brent could back off and that could really be weak, and they kind of go out of sync for a bit and you get caught in that. But there's nothing wrong, if you like doing that, to looking at the chart, still having a setup and strategy that you're trading and you're very careful and cautious about and you're very methodical with. But if you see that starting to form in the other chart, then perhaps doing that. Now, another question, I think, without looking, was what if one's stronger than the other, trading ratio between the two? Yes, to me that's a completely different trade. We're trading a ratio between the two. There's obviously a reason why. It could be short-term supply-demand issue, of course, but it could be a longer-term thing in terms of who's consuming it, the quality of the oil, all this kind of other stuff, and then you're going to go into a real deep dive with it. So ratio for me, I'm not so keen on trading, because I prefer to trade direction of one instrument. Again, you know, price action is my thing that I like to trade, and that kind of gets ruined a little bit when you're trading a ratio. It doesn't mean to say that lots of people out there are trading the spread between the two. very successfully they are as they're trading crack spreads and all this other kind of stuff. There's loads of things you can go in with crude oil. It's a really good instrument. It's something that you can become a specialist in as well. But just be mindful that it does go through phases and sometimes years and months where it's very, very quiet and it's not a good vehicle at all. But sometimes it's really, really active and it becomes a lovely trading vehicle to trade. You can become focused on crude oil, solely trading crude oil. You know when kind of the spikes are, you know what's coming, this, that, and the other, and it's a nice instrument to trade. So anyway, that was a brief thing, guys. The best way to trade crude oil. Hopefully that's helped somehow, and you guys as well. Appreciate your comments in the comment section below. Add your thoughts, agree, disagree, anything to add to that to help this good trader. Who knows if he's a good trader? He seems to be asking the right questions, and to me that means you're a good trader regardless of what level you are in profitability or experience. If you're asking the right questions, you're doing the right things. It's just time. Take care. See you next one. Bye bye.